afternoon, everyone. Thanks for tuning in, and thank you to Nicholas and his team for giving Minerals 260 the first opportunity to present at a real-life conference. I like to tell people the name came from it's the average number of bubbles in a glass of beer. It's the combined age of the Minerals 260 board. So next year it's going to be Minerals 264. But the real answer is it's the combined atomic weights of the 5 metals that we're focusing on, which is gold, platinum, palladium, copper and nickel. As Gon alluded, Minerals 260 was born out of Liontown Resources to hold the non-lithium assets of Liontown Resources. And we're only 3 days old, having listed on Tuesday of this week. Today I'm just going to provide an overview of our key assets and just touch a little bit on the results of the demerger and IPO process. The standard disclaimer, I won't dwell on this, but like everyone else, this thing is available on our website, and if you are the sort of person that likes to read these pages, then I suggest you do so there. Minerals 260's main assets will be the Mora and Coogen projects in the Julimar Mineral Province of southwest Western Australia. They're located about 150 kilometres northeast of where we are at the moment. We have a largely contiguous land holding of 1,100 square kilometres. As other people who have presented on this area have said before, basically the area was unexplored before this current phase of exploration has started. Liontown and now our early exploration results have been very good. You could even say outstanding, with drill intersections of up to 43 metres at 1.8 grams per tonne gold. And following a very successful IPO, we now have the funding to accelerate exploration on the Mora and Coogen projects. On the right-hand side of the slide, we have the individuals that comprise the board. These were the people that actually made the decision to acquire the Kathleen Valley project back in late 2016, and that seems to have turned out okay. The board is backed by the same exploration team, the people that drilled out Kathleen Valley and the Baldania resource. So we've got the people on board that know how to point drill rigs in the right direction. When we set out on the IPO journey, we looked to raise a minimum of $15 million and a maximum of $30 million. As it turned out, we easily raised the $30 million. So on listing on Tuesday, we had 220 million shares on issue and a market cap of $110 million, and thankfully we're still pretty close to that mark. The IPO was incredibly well supported by Liontown shareholders. In fact, the support was so strong that on listing, the share registry was made up of about 95% Liontown shareholders. We also had very strong support from institutions and high net worth individuals who weren't part of the Liontown register. In fact, the support was so strong across all groups that we had to do a significant scale back when it came to allocating the Minerals 260 shares. On the right-hand side of the slide, just a brief overview of how we plan to spend the money. As you can see there, most of it will be going towards the Mora and Coogen projects, and within that, most of it will be going towards drilling and related activities. We will also have a significant war chest to consider new opportunities, and if those new opportunities stack up and we end up acquiring them, then we have the money to accelerate exploration on those new projects, so we won't have to go back to the market to seek further funds to do that. We've set ourselves a fairly ambitious agenda going forward. The main priority will be to follow up on drill intersections that Liontown reported earlier this year. We do have a diamond drill rig booked. It's meant to turn up later this month or early next month, so we're keen to get on the ground and start drilling. We have a number of other drill-ready targets which we'll look to start work on later this year as well. And we're also doing a lot of target definition work in the short term to identify further targets for follow-up. So it's all about defining as many drill targets as quickly as we can and drill test them as quickly as we can. Moving on to the projects, like I said, we're in the Julimar region. We have the second largest land position for any other ASX-listed explorer in the Julimar Mineral Province. We're also very proud of the fact that we actually identified the potential of this area before Chalice discovered Julimar. Our initial land position was picked up in 2018, 2019. There was actually a lot of vacant ground at the time. We picked up what we thought was the best ground around Mora, and that decision has been validated by the exploration results that we've got to date. Again, in hindsight, we probably should have been looking a bit further south towards 2J. Just for the avoidance of doubt, we are in the same geological terrain as Julimar, so we have underlain by the same sort of geology. Our initial exploration quickly identified the potential of the area. We identified multiple targets, and our one and only drill program has come up with a significant mineralisation. And when I say significant mineralisation, I don't mean anomalous geochemistry, I mean all grades and all widths of mineralisation. We've identified 3 prospective trends that cut through our land position. We have the northern extension of the Julimar corridor, as defined by aeromagnetic data. Further to the east and largely located on our wholly owned tenure, we have the Mount Yule corridor. This is the area where we've done most of our exploration to date. It's the area where we've done our drilling, and it's the area where we've got our drill intersections, including the 43 metres of 1.8 I mentioned before. And we're also going to see significant copper, 9 metres at 2.1% copper. Both the Julimar and Mount Yule corridors, all we've done on the Coogen joint venture ground on the western side is geochemical sampling, and we've defined geochemical anomalies coincident with both of those trends. Further to the east, Bindi Bindi, we have the historic Bindi Bindi nickel trend, and when I say historic, back in 1968, Poseidon Nickel intersected some significant nickel values just before they went off and discovered Windara and kicked off the nickel boom, and they never came back. So we're keen to follow that up as well. So these will be the 3 trends that we focus on as Minerals 260 going forward. Most of our work to date has focused on the Mount Yule magnetic anomaly. This is a large magnetic feature. It's 7 kilometres east-west. It's 2.5 kilometres north-south. We think it's largely due to a mafic, ultramafic intrusion, mainly because that's what we see in the drill holes. We've done 1 drilling program, and that 1 drilling program has defined 3 zones of mineralisation. The Angerpina gold zone, it's 900 metres long. As I've said before, it's got intersections up to 43 metres at 1.8 grams per tonne gold. To the north of Angerpina, we have a plus 2 kilometre long copper gold zone. As you can see from this slide, there's multiple intersections in that, including numbers up to 9 metres at 2.1% copper and 7 metres of 1.1 grams per tonne gold. And in the southeast corner of the magnetic anomaly, we have a single drill hole. The top of the drill hole intersected 17 metres of 0.4 grams per tonne gold, and below that and at the bottom of the hole, in the same hole, we intersected 12 metres of 0.2% copper. All of these trends remain open, and this area will be the initial focus of Minerals 260's drilling program in the next 1 to 3 months. I've got to be careful. I keep wanting to say Liontown Resources, so I've got to get out of that habit. Just zooming in on Angerpina, on the left-hand side of this slide, we have a drill hole plan. In addition to the 43 metres of 1.8 grams per tonne gold, 300 metres to the northwest, we have a second drill intersection of 11 metres of 1.5 grams per tonne gold. There's no drilling in between these 2 holes. We're reasonably confident that both of these intersections belong to the same zone of mineralisation. To the right-hand side of the slide, you can see our current interpretation of what we think the mineralisation is doing. We think it's a steeply dipping zone, and based on geochemical values, we think it gets pretty close to the surface. And also based on geochemical values, we think we're dealing with a plus 900 metre long zone. The next step, the next stage of work at Angerpina will be to come in with the diamond core rig and to confirm the continuity and the style of mineralisation, and then come in and follow that up with reverse circulation drilling. The other thing I'd like to point out about Angerpina, we are in a farming area, so we are a little bit hostage to the cropping cycle in that part of the world, but at Angerpina we've negotiated access all year round, so we can effectively get into Angerpina and start work and continue working. We won't have to stop when the crops come, or when the harvest, when they're planting, etc. The Coogen joint venture, this is the joint venture we have with Lachlan Star Limited. It's immediately to the west of our Mora ground. Minerals 260 has the right to earn 51% in the Coogen JV. The only work that's been done on this project is we started geochemical sampling back here in March. We stopped in about May when we decided that we were going to spin the whole thing out. So there's been 1 phase of geochemical sampling across the Coogen ground. Like the geochemical work we did on Mora, we've defined multiple geochemical anomalies. On the right-hand side of this slide, we've got an example of one of these. This is the Borbana gold anomaly. It's a large, complex, multi-peaked gold anomaly with individual values up to 135 ppb gold, so some pretty significant numbers in first-pass sampling. I'm often asked, do I see potential for PGE mineralisation on our land position at Moora and Coogen? The short answer is yes. This is an example of one of the PGE anomalies we have. It's in the northwest corner of the Coogen ground. It's a 2 kilometre long PGE anomaly with values up to 160 ppb combined PGEs, or 0.16 grams per tonne. So very, very anomalous. And here it's coincident with a very robust, coherent gold anomaly as well. So here we have a large 2 kilometre long precious metal anomaly that's waiting to be drilled. So at Mallory and Bourbana and all the other geochemical anomalies that we haven't quite got to drill ready yet, we're planning to do ground geophysics to help us optimise siting of maiden drilling. So the next steps for Moora and Coogen, at Angerpina, as I've said before, we'll get in there with a diamond core rig to confirm the style, orientation, continuity of mineralisation. Then we'll get stuck in with an RC rig just to define the limits and eventually, hopefully, just seamlessly transition into resource drilling. Elsewhere, and as I said before, we have access all year round at Angerpina. Elsewhere in the Moora and Coogen areas, there's a number of other targets, as you saw with the Mount Ewell magnetic anomaly. On the right-hand side of this slide, I've got an example. This is from the northern copper zone. You can see 9 metres of 2.1% copper in the bottom of the hole. We did drill underneath that intersection. Unfortunately, we intersected a barren dolerite dike, and those of you following the Julimar story know there's a lot of barren dolerite dikes in this area. But downhole geophysics did show that we had a nice off-hole conductor, which we think may well be the primary sulphide zone that's responsible for the 9 metres of 2.1% copper in the shallower hole. Elsewhere, we have a number of targets we need to make drill ready. We're going to do this through detailed geophysics, including aeromagnetics, which is due to start later in the year, ground EM and probably IP surveys to define the zones of sulphide mineralisation that we're targeting. And we'll also look at the geochemical data that we've collected to date and use that to help us vector in and make sure that we're optimising our drill follow-up. Large parts of the project areas have never seen any exploration at all, never been touched, so we're keen to get out there and do further first-pass sampling, and we're confident that we'll define more drill targets, and then, of course, the logical step, once you've defined the drill targets, is to get out and test them. So now for the slate knives, we do have 2 other projects in the Minerals 260 portfolio. I've got one slide on each. Dingo Rocks, it's located about 110 k's south of Norseman. It's in the Albany-Fraser province. The Albany-Fraser province is also home to things like Tropicana Gold Deposit, the Nova Nickel Deposit, which are located to the north-east of our Dingo Rocks project. The prospective geology there, which is indicated by those magnetic highs, is largely covered by transported cover. Previous exploration has been limited to surface geochemical work, which I don't think has been effective. There are multiple magnetic highs, some of which I think are mafic, ultramafic units, which are prospective for nickel and PGE mineralisation. Yoel West, it's up in the northwest corner of the Murchison province of the Yilgarn. Again, magnetic data is showing that there's lithologies there that are prospective for gold and base metals. For some reason, there's been no exploration done in this area at all, which I find staggering, so we're keen to get in and do what we've done at Moora and Coogen and find some drill targets. So just to summarise, why Minerals 260? Well, we have a large strategic land position in the Julimar Mineral Province. Our early drill successes confirm potential for significant mineralisation. We have multiple drill-ready targets, Angerpina being the focus. We have the key land access agreements in place. The area is largely unexplored. When you think about the Eastern Gulf, which has been explored for 50 years, this has been explored for 1, so that shows you the potential upside. Very well, very credentialed board and management team, and of course we're in Western Australia, which is one of the better mining jurisdictions. So thank you. Cheers.